So I had made a video of how I filter stocks from the MarketSmith India website. So as you can see here, this is the MarketSmith India website. I have made it full screen, but I have discussed these three filters: the bread and butter, the hidden gems, and the promising gems. So on my YouTube channel, you can go to the stock filters playlist. There you will find a video on how to filter Indian stocks. So there I have made a detailed explanation of why I use these three filters to select the best stocks which are trending up, which are consolidating, and which are most likely to give a breakout. Now, some of these stocks are in an uptrend, so they may not be consolidating. So we have to scan the list that we get from here and find only those stocks which are creating a base. So today I want to discuss this particular filter. I call it the best. Okay. But before you understand this, I want you to understand this filter, the bread and butter, because this is my base filter. Okay. Based on this filter, I have built my other filters. So let us first revise what this filter was about. So as you can see, the first criteria is the price strength has to be more than or equal to 70, which means all the stocks in this list are doing better than almost 70% of stocks in the entire stock market. So for example, let's say there is a stock called ABB. ABB India is a company. If it comes in this list, that means ABB is doing better than more than 70% of the stocks in the entire stock market. So that is called as relative strength. So that is the first filter. Buyer demand, A and B represents high institutional demand. Group rank is from 1 to 40. So there are 197 industry groups. So roughly 200. Out of those, I am looking at only rank 1 till rank 40. These are the best industry groups. These are MarketSmith ratings. Okay. Then we come to the technical filters. The price should be more than or equal to 20. This is to avoid penny stocks. Then the average rupee volume should be more than 1 crore rupees. Then the average daily volume, the number of shares traded, should be more than 200,000 shares. So these two filters are to avoid stocks which are illiquid. This filter is to avoid stocks which are penny stocks. And then the price should be, if it is below the 52-week high, it should not be more than 25% below. That's this filter. And if the price is above 52-week low, it should be at least more than 25% above the 52-week low. And of course, the daily price change, any stock that has fallen more than 5% in a given day, it doesn't come in this filter. So I use this filter on a daily basis, because if I use the same criteria daily, then the list changes. 80% of the list remains the same, but the remaining 20% keeps changing as data changes. Okay. So what I have done for this filter is that I have removed all these technical filters. So which means I'm increasing risk. If I remove this filter, I'm allowing penny stocks to come into my watch list. If I remove these two filters, I'm allowing illiquid stocks to come into my watch list. If I remove these two filters, then I might have stocks in my watch list which are not near their 52-week high, which is risk. If I remove this filter, again, the stocks which have fallen more than 5%, I'm inviting them to come to my list, which means I'm increasing my risk. So how do I compensate for that increased risk? The only way to compensate for that increased risk, if I remove all these filters, then I will have to tighten up these filters, correct? So if in the technical filters, if I increase risk, then in MarketSmith rating filters, I will reduce risk. So how do I reduce risk? Well, I keep the industry rank constant from 1 to 40. Institutional demand obviously should be A and B. The price strength, it has to be good or great. So either 80 or more than 80, which means I will only look at those stocks which are doing better than more than 80% of the entire stock market in terms of 52-week performance. Okay. So if I have a stock which is doing better than 80% of all stocks in the stock market. If I compare its 52-week performance with other stocks, then that stock will come in this filter. Not only that, I will also put the earnings strength from good and great, okay? Which means in terms of earnings stability and earnings growth, I want a stock which is doing better than more than 80% of the stocks in the stock market. So if I have a stock which has a earnings strength of good or great, so 80 or above 80, then that stock has better earnings growth and better earnings stability than 80% of stocks in the entire stock market. So you see what I'm doing? I'm removing these filters, increasing risk, and tightening up these filters, thereby compensating for the risk. So if I go here, see, I have removed all the technical filters. So I have increased risk, but here I have tightened up. Earning strength, good or great. Price strength, good or great. Institutional demand is A or B. I'm not even looking at C. Group rank, the best. Okay. Now, if you want to tighten it further, okay. Now, this list will give you like 67 stocks. Let me show you. 67 stocks. Now, a lot of stocks in this list are likely to be penny stocks, correct? So I'm going to remove them. A lot of stocks in this list are likely to be more than 5% down. So I'm not going to look at them. A lot of stocks in this list are going to have broken charts, which means a lot of rising windows, falling windows. I'm not going to look at them. I'm only going to look at those stocks in this list where the chart looks clean. There is decent volume coming in, not as much volume as I demand, but decent volume coming in. Chart looks clean. It is not a penny stock and it is creating a nice consolidation pattern. So just to give you an example, in this stock, I found this stock, see Vesuvius, for the next day. By the way, this is not a recommendation. Okay, I'm just giving you an example. So if you see this stock, see nice consolidation happening. 50-day moving average, the green is 150-day and the red is the 200-day moving average. RS rating of 80, which means it is doing better than 80% of all stocks in the stock market in terms of price performance. See how the stock has gone up. See, from here it was almost between around 1700. Now it has gone up more than 5000. The stock has been inching up gradually. See, now it is creating this consolidation pattern. It is tightening up. There are 3 contractions. That means 6 points in the base. Looks good. Okay. But remember, this is not a recommendation. As you can see, the earnings, although the rating is high, but the graph is falling. Okay. The line, it is sloping down. Okay. That's one negative sign. But if you look at the base itself, it's a good candidate. So coming back to the, just a second. Yeah, coming back to the breakouts. So yeah, so for this, I am only using the MarketSmith ratings. Okay. If you tighten this further, so if I remove the good and I remove the B and I remove the good here, then it will become even more focused, right? So instead of 67, you might get less number of stocks. So the more you tighten this, the more you are reducing risk. But on the other hand, the number of opportunities also decline. So that's the game of filters that you can play with MarketSmith. I'm using MarketSmith for quite some time now. So it allows me to create as many filters as I want. So currently I use these 4 filters to find the best stocks available in the market, which are nice stage 2 uptrending stocks, which are consolidating, tight price action, so that I can take a position in them, shoot for a shorter or a longer term move. So these filters have been very helpful. And have a look at these filters, have a look at the stocks and see if it helps you. Okay. Thank you so much.